The Australian dollar has been under pressure for most of the year. Weakness in exports and retail sales has prompted the Reserve Bank of Australia, RBA, to cut interest rates to a record low. And given the currency's traditional position as the #1 high yielder, these events have lowered the long-term Aussie position. Joining me on the line to discuss the forecast is Francesco Maggioni. Francesco, how do you feel the pair have been conducting themselves for the past 3 years?
The Australian dollar versus Japanese yen seems to be behaving in a similar fashion to the 2005 and 2007 period. Basically, back then and since 2010 to these days, the pair has been inserted in a considerably wide sideways movement between 0.75 and 0.90, and only recently it has broken on the upside. If similarities continue, this recent upward movement, and the next one that should be coming soon, should be interpreted as the final stage of the current bull market. This finds confirmation also in general market cycle pattern, where the commodities, and the Australian dollar is a good proxy, tend to perform at their best.
Due to its short-term strength, what is your prediction for the next month?
As said before, the monthly chart, but also the daily one, are calling for short-term strength. Therefore, I would expect the pair to arrive around 0.9770 from now to late August. Main reason for this can be found on the daily chart, in which a bullish head and shoulders can be found in the price action going from the beginning of April to these days. We will have the final confirmation that this pattern is working only at the violation of the neckline at 0.956. On a macro view, this could be triggered by the performance of the commodities and the energy sector in particular. Concerning the other side of the pair, the Japanese yen could see a further devaluation due to two main factors. The first one, the behavior of the currency due to the massive quantitative easing put in place by the Bank of Japan, and since the Japanese yen is also a safe haven currency, a renewed interest for risky assets should trigger some selling pressure on safe assets, yen included.
The pair jumped quite high on your 3-month prediction. What is the reason for that movement?
That is actually the natural target of the bullish head and shoulders structure in which the pair is currently inserted. Head and shoulders targets are found by copying and pasting the width from head to the neckline up, in this bullish case, above the neckline.
At 12 months, there is yet another significant dip. What's the factors related to that drop?
There could be macro factors and those related to technical analysis. Starting on the latter, the overall movement that started from the 2009 looks like more of a bullish but corrective structure rather than a healthier bullish impulsive structure. To better understand what I'm talking about, you can see how different the pair behaved from 2001 to 2007 compared to the 2009 to today. If that proves to be correct, then the real trend is downward, and therefore I would expect the pair to at least enter again in the usual 0.75-0.90 channel. Concerning macro factors, an inversion could materialize by the substantial risk-off mood in the markets that could be triggered by a number of events, of which we actually are not in short supply. My main concerns are the possible October juncture of two main events, such as the ending of the QE by the Fed and the release of the results about the AQR, Asset Quality Review, by the European Central Bank, concerning the true need for additional capital for most European banks.
Finally, do you have any other predictions for the pair?
Yes, it is important to have a plan A, but also a plan B. In this case, my plan A is just what I discussed with you. However, the overall structure may change if the pair will break the previous high set at 1.05. In this case, a complete new analysis should be performed, and the plan B should call for renewed strength to the higher figures, and most likely postponing and resizing the next downward leg, both in terms of time, in months, and price, the depth. On the other hand, if selling pressure should materialize almost immediately, with the breaking of the May low set at 0.9347, then again I wouldn't consider the reaching of the 1.05 level, but would be set to profit from a possible wider downward movement.
Thank you for your time. I'm Alex Isat, and you've been watching AUDJPY TV. Goodbye.